Yeah, good morning, everyone. So yesterday we saw some corrections in the US market, mainly driven by Apple, which the share prices came down by around 4%, uh, and had an impact on the overall market. Uh, Today morning, even the Asian markets are also soft, marginally down, whereas if we talk about the futures of the US markets are marginally positive. Commodity also is oil has come up by around $1, whereas aluminum and copper are flat as compared to the closing of equity market in India. Otherwise, they are up if we talk about the same time yesterday by almost around 0.5 to 1%. Copper is also, iron ore is up by around 1% today morning in China, and steel is also up by around 0.5%. China has a GDP growth data which came today morning, and they were ahead of market expectations for the fourth quarter, and that has supported the commodity prices. Overall, seems like in India also it's some profit booking may come in the morning, but overall seems like range bound day for today's trade. And I'll request technical team to take up from here.
Yeah, okay, sir. Good morning, all of you. See, last two trading session we saw that after a sharp sell-off, we see some bounce back. But upside Nifty facing a immediate resistance, and we saw that yesterday that Nifty struggled to break the 23,400, and yesterday closed below that important resistance level. Today we expect a negative open. If Nifty break 23 270 at downside and close below trading below this range, then we expect again some pressure towards 23 200 and below that 23,000 at downside. Upside 23 400 is the first major sub resistance for index. If Nifty is trading above that, then we expect further rally. Till the date, we expect some negative side, and if first immediate support break, then we expect this pressure to be continued. Bank Nifty also facing immediate resistance 49,750 and downside major support place around 49,000. If break that level 49,000, then we expect further sell off towards again 48,700 and below that 48,200. That's previous low. Both index we expect some negative open and some pressure at this level. Stock specific, Ambuja Cement looks positive at current level right now, trading the important average range, and we expect this momentum towards 550, 560 and upside. HDFC Live, we saw some great momentum in yesterday's session. Do we expect this momentum to be continuing few trading session also? Negative side, Dr. Reddy looks weak. And downside, we expect pressure towards around 200 DMA, that is come around 1280, and below that we expect this pressure to be continue. We already mentioned that Glenmark Pharma in negative side yesterday. This negative side till the continue in Glenmark Pharma also. Ipca Lab also look weak at current level. That's it for technical derivative. I can.
Yes, and good morning, everyone. So on the derivatives front, as you have seen that there is not much of major change in yesterday's session. Nifty remain likely to remain flattish note once it got open up on about 100 points. After that, Nifty managed to remain in the same range, due to which the weekly expiry OI positions got liquidated between the range of 23,300 to 23,500 strike. In the Wednesday session, when the pullback came strongly, at that point of time, we have seen that the put right position, call right position have extended towards the 23 200 to 500 strike, but that weekly position got settled off. And again, we are seeing that on a monthly basis, 23,000 level strike of put right position is holding strongly. So, till the time 23,000 level is not getting broken out, till that point of time, we will witness the same kind of situation in the market of 500 points range will be witnessed in the market. But the positive sign that appeared in yesterday's session was from PCRY. PCRY was continuously trading below one level, and in yesterday's session, we have seen that PCR almost shooted up by 0.19 basis point, due to which it gave closing at 1.01 level. Once if PCR goes above 1.08 level, then we might see some buying to be approached in the market towards the 23,450 to 500 level. But from that level again, we might witness some selling pressure to be seen, as we are seeing that Gift Nifty is likely to open below 7,100 points on the lower end. So once if Nifty spot level goes above 23,300 level on a stable basis in today's session, the new long position can be created towards 23,400 to 450 level in intraday front. While on the stock specific and sector specific front, banking, metal, oil and gas looks a positive. Selective counter that looks positive, where fresh long OI position has been created, was from MFSL, KEI. LTTS looks positive, while on the negative front, KPIT Tech, CESC and Britannia looks negative. So that's it from better to front. Thank you.
Good morning. On the result front, Havells India posted the results yesterday, and result was below expectation. In terms of top line, it has seen the growth of 11% on a YY basis at rupees 4,890 crore, and this was versus expectation of 5,063 crore. On operating level, margins reported at 8.7%, again below the expectation of around 10.3%. If we look at the segment-wise performance, in switchgear segment, top line has seen decent growth. This was on account of domestic business of real estate and project. However, margins declined due to change in mix and plant relocation that increased the overall expenses. The management expects normalization in the coming quarters. Cables continue to show good growth, where power cables delivered strong growth. Margins have also improved in cables. It has witnessed destocking in wires due to copper price softness that impacted revenues. In lighting business, there was a decent growth in volumes. However, revenue remained impacted due to LED price deflation, while contribution margins remained in the range of 31 to 32%. Electrical consumer durable top line has seen good growth, but margins impacted by product mix. It was a steady quarter for Lloyd business. The stock is currently trading at a PE of 50 times to FY26 EPS. We will provide further update post the con call. Thank you.
Good morning. A couple of results. Infosys reported numbers about the street expectations. It was a broad-based growth wherein revenues and margins were ahead of the expectations. Company has indicated a pricing increase of around 3.6% in the last 9 months, which is also positive. In addition, company has reiterated that discretionary spend in the BFSI vertical, which was earlier seen in US markets, is also now seen in Europe. So this is also positive for the company as well as for the industry. For Infosys, generally first half is stronger than the second half historically, and also based on the guidance revision it has given, we expect fourth quarter to be muted both in terms of revenues and margins. Margins will see headwind of wage hikes expected starting from Jan. So stock is available at 27 times FY26 expected earnings, and it can remain flattish in near term. Long term outlook remains positive. One can accumulate Infosys on dips. Secondly, LTI Mindtree numbers, both in terms of revenues and margins, were in line with the street expectations. Order intake was highest in many quarters at $1.68 billion. Last quarter, the number was $1.3 billion. And last year, same quarter, it was $1.5 billion. So during the quarter, company has passed on some productivity benefits to its top client for 2 out of 3 months during the quarter, and the same will also continue in Q4 quarter as well. So while the deal pipeline remains strong for the company as well as the order intake, stock is available at 35 times FY26 earnings and can remain under pressure in the medium term. Long term outlook remains positive for LTI Mindtree. Thirdly, Mastech numbers were below expectations. The dollar revenues at $102.9 million was down 0.7% sequentially amid furloughs and seasonally weak quarter for the company. Outlook for UK business remains healthy with increasing public service investments coming up under the new government. North America business for the company is also steady. Company also is reducing the tailwind clients and now is focusing on improving revenue per client metrics. So stock is available at around 20 times FY25 expected EPS, and one can accumulate the stock for longer period on dips. Today also, Wipro and Tech Mahindra will report their numbers in the evening. Flattish numbers are expected for both the companies. Any positive surprises from Wipro in terms of overall numbers or guidance can see a positive momentum in Wipro stock. That's it from me. Thank you.
Good morning. Axis Bank posted its results. Results is below expectations. Net interest income grew 9% year on year, largely due to slow credit growth. PAT grew by 4% year on year, flat quarter on quarter. Overall, NIM stood at 3.93%, declined 6 basis point quarter on quarter, is due to the full impact of application increased outflow rates on operating deposits, which resulted in higher investment during the quarter. The YOY operating expenses stood at rupees 9,044 crores due to increased technology expenses and growth business investments. Its ROA stood at 1.71%. Deposits and advances growth were stable at 9% year on year and 1% quarter on quarter. Gross slippages increased by 22% quarter on quarter. Slippages are mainly in the retail unsecured book, largely in cards and personal loans. The bank mentioned in the con call that they are focusing on strategies such as resilience in franchisee, creating multiplicative forces to build a competitive advantage and building for the future. They have launched new products, including a personal finance management tool, and are focusing on deposit quality, retail asset quality, and growth for sustainable outcomes in the next few quarters. The IFC, the soft loan window of the World Bank, has partnered with Axis Bank to provide $500 million loans to scale up green project financing in India. The stock is trading at a PE of 10.9 times FY26 EPS and 1.8 times trailing price to book value ratio. Overall, it is a subdued quarter below industry growth, so the outlook is neutral in the near term. Thank you.
Good morning. We attended C8 Limited con call. So company expecting strong momentum in two-wheeler, farm and TBR segments with anticipated growth in high single to double digits. The company also anticipates double-digit export growth in FY26 with export contributions increasing from 19% to 26%, driven by Camso integration and improved market access in Europe and the US. Raw material prices are expected to remain stable in quarter 4 FY25. However, international rubber prices may create some margin pressure. Company plans further price hikes across replacement and international segment in quarter 4 FY25 and potentially in quarter 1 FY26 to offset raw material cost. So as per company, benefit of price increase in Q3 and further in Q4 can improve margin quarter on quarter basis. The company aims to achieve margins near the higher end of its historical range of 10 to 14% by FY26. The company's growth potential across domestic and international market, a focus on premium products and strong operational performance indicate a positive trajectory. However, margin recovery remains a challenge, and near-term performance depends on the company's ability to manage cost, execute price hikes, and sustain growth in key segments. Uh, the stock currently trading at P of 16 times FY26 EEPS. So our outlook for Sage Limited is long-term positive. Thank you.
Yeah, Reliance Industry came up with the numbers. Numbers were marginally ahead of expectations, mainly supported by retail segment. Geo, we saw, though ARPU was lower than expected, came in at 2003 versus expectation of 2005, but subscriber had shown increase. They increased by almost around 2.4% year on year. Retail had seen a bit turnaround, wherein though the area under operation, the company has reduced, but the revenue from revenue per square feet has shown good improvement both quarter on quarter and year on year. Revenue increased by 7% year on year and EBITDA increased by around 9% year on year. Whereas O2C business, again, we saw some improvement. wherein production has increased by around 9%, revenue by 6%, and EBITDA by 2% year on year, but 16% quarter on quarter. So the improvement which was expected quarter on quarter has come better than expected. And oil and gas, where they produces oil and gas, has also shown some improvement, wherein quarter on quarter revenue has increased by around 2.4% and EBITDA by 5.2%. So overall seems a bit positive numbers as compared to the expectations. So that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold prices are likely to test 79,000. Prices are supportive at 79,000. One can buy around 79,000 with a stop loss of 78,750. On upside again, 79,400, 79,600 is the level where one should book profits. Wherein silver, one should buy around 92,300 with a stop loss of 91,500. On upside, again, prices are resisting 93,500, 93,700 zone. So profit booking is advisable on higher end. Wherein metals, uh, copper, one can initiate a buy around 838, 837 level with a stop loss of 832. On upside, we are eyeing for 845, 848 levels. Whereas in zinc, one can buy around 275 with a stop loss of 272. On upside, we are eyeing for 280 as the target. And in crude oil, the prices can cool off. So if prices are sustaining below 16,900, then we might see some profit booking till 6,800, 6,750. And on upside, sell around 6,900 with a strict stop loss of 6970, or on a higher end psychological level of 7,000, and book profits around 6750. If prices are sustaining below 6750, then we might further see some correction till 6600. But as of now, 6750 seems to be a good support area. And in natural gas, one can buy around 358 with a stop loss of 345. So on upside again, 380 is the target we are eyeing for. That's it from us. Thank you very much.